The last time I checked, actually, the peso was just ahead in underperformance, but they're battling it out, aren't they, for the worst performing major currency in 2016. Is Brexit fully priced in to the currency or not, Richard?
Well, I think we've had a couple of weeks now to digest it. We've seen a really sharp drop in the pound. We've seen a really sharp drop in UK rates, which we'll turn to in a second. But I think I'll refer back to what Alice Rivlin said in the previous segment. This is going to be a very long, drawn-out process.
Game, isn't it?
There's going to be a lot of bumps in the road. I think we're probably efficiently priced to now, but you know, we've still got official data to come out. The survey data is looking like it's really, really soft. And so it's going to be a long and winding road, many twists and turns. But for now, I'd say we're reasonably officially priced, but the Bank of England next week could
and let's look at the 2-year yield, the 10-year yield ahead of the BOE next meeting. What are they telling us?
Well, I think the 2-year yield, I mean, there's a lot of different ways about looking at Bank of England expectations. And I think if we're looking at a chart, the 2-year chart is a nice clean one to show that those yields have absolutely fallen off a cliff. And so expectations are reasonably high. I think investors are thinking more likely than not we'll get a rate cut or 2 rate cuts in the next couple of meetings. And I think that the 10-year yield is telling us that we actually might be getting some more QE from the Bank of England in coming months. So easing is expected. Timing is a little bit uncertain, but it is definitely coming if you look at market pricing.
Richard, you said a long and winding road. You were quoting Alice Rivlin, but will it be winding or will it be extraordinarily bumpy?
I think it'll be bumpy and winding, Vonnie, if you allow me to mix my metaphors. I think there's going to be a lot of uncertainty. I mean, we have to have Article 50 declared. There's a lot of political uncertainty. That political uncertainty can spill over onto the economic side of things. It impacts the UK. How much does it impact Europe? And then how much does it impact the rest of the global economy?
So is anybody modelling out a fair value for the British pound versus, say, the US dollar, or for the British pound index, for example? Or is there any way of grappling with that?
Well, because of that uncertainty and because it's going to be extended over an extended period of time, I think that forecasting is a pretty difficult game. I mean, almost as difficult as forecasting the UK weather.